welcome to another exciting episode of World of Business, your weekly update into trending news and latest developments on the stock markets. It's also here we herald thriving but unsung heroes in the business world. My name is Tafaranda Guta. Now, Zimbabwe is once again at the center of attention recently after the IMF projected that the economy would grow by 6% in 2025, which is a drastic comparison to last year's 1.7%. Now, there are a lot of factors that may attribute to this growth. We're looking at the rains that have been quite well this season as compared to last year's. We're looking at gold prices that have been going up, and we're also looking at remittances from Zimbabweans abroad. Now, to help us unpack all of this on the show, we're joined on the show by Mr. Enoch Rukawa, who is an economic analyst who will join us later into the show. But for now, we give you our exchange rates as of now. The Zimbabwe gold to the United States interbank was at 26.70 ZiG. The Zimbabwe gold to the Great Britain pound interbank rate was at 35.75 ZiG. The Zimbabwe gold to the euro interbank rate was at 31 ZiG. The Zimbabwe gold to the South African rand interbank was at 0.64 ZiG. The Zimbabwe gold to the Botswana pula interbank rate was at 1.88 ZiG. We also give you your commodity prices on the global market. Gold per ounce traded at $4,031.97 after it went up by 18 percentage points. Silver per ounce traded at $48.44 after it went up by 1.95 percentage points. Copper per pound traded at $511.10 after it went up by 0.26 percentage points. Platinum per ounce traded at $1,659.13 after it went up by 1.38 percentage points. Well, that's it for this segment. Do join us in the next segment. Don't go nowhere. We still have a lot more to unpack here on World of Business, only on ZBC. Hello and welcome to the second segment of World of Business, and we have a lot to unpack on this program. The IMF recently put out projections that Zimbabwe's economy can grow by 6% in 2025 as compared to last year's 1.7% in 2024.
In its press release on Friday, the Bretton Woods institution praised the government for introducing reforms that have resulted in a notable progress for the economy. It cited milestones such as stable economic conditions, increased gold output, massive agricultural production, tight monetary policies as having aided to the growth prospects. The IMF, whose board of directors have also held discussions with the government during the course of the year, is optimistic that going forward the current policies will lead Zimbabwe to economic prosperity. Confederation of Zimbabwe Industries Chief Economist Dr. Cornelius Dube says the sentiments by the IMF restores global confidence on Zimbabwe.
What the IMF is just noticing is in line with what we are already noticing on the ground here. The stability that has been sustained since November last year has actually created growth momentum across almost all sectors of the economy, which actually is going to ensure that we are going to grow probably better than what has been originally envisaged.
The restored cordial relations between Zimbabwe and the IMF is also attributed to the gains of engagement and the re-engagement drive.
It brings us at the top of the southern region in the African continent, even at a global level, in terms of our economic performance, and also knowing that we have also focused on improving sustainable practices in our country.
Despite a notable strides on the economic front, the IMF called on authorities to further guard against the local and the global shocks. It noted that economic progress will depend on commitment to further reforms after the strides from the Transitional Stabilization Program, the National Development Strategy 1, and the upcoming NDS 2. Zimbabwe has also revised upwards the growth forecast for this year to 6.6% growth from 2% last year. Stanley James, ZBC News, Harare.
Now, to help us unpack all of this on the show, I'm joined by economic analyst Mr. Rukawa on the show. Mr. Rukawa, welcome to the show, sir.
Thank you very much, Tafara. Thank you so much for inviting me.
Now, first things first, Mr. Rukawa, can you give us a background on how the IMF comes up with these numbers and projections for country economies?
So when you look at coming up with projections, especially the macroeconomic numbers, your inflation, your GDP growth, your exchange rate, and also your external trade numbers, what then happens is that they consider the macroeconomic factors. What are the key drivers that are actually driving the economy, whether you're looking at agriculture, whether you're looking at mining, or you're looking at the manufacturing sector. So to contextualize, they put all these facets and all these input factors into consideration when coming up the numbers, also including the monetary numbers as well.
Okay. So now you're talking about sectors. You're talking about agriculture and mining. Now, which of these sectors have contributed to this growth? Because 6% as compared to last year's 1.7%, that's a big gap that's there.
Indeed, the agricultural sector has done well in terms of propelling the economy. When you then look at the projected contribution, according to the Ministry of Finance, you're looking at 21.5%. When you then drill down into the numbers to say, okay, within the agricultural sector, what are the key products that are actually pushing these numbers? When you look at tobacco, you realize that for the 2024-2025 agricultural season, we have managed to achieve deliveries around 354 million kilograms. And when you then put that number into monetary terms, you're looking at northwards of 1 billion. Look at the
United States?
Yes.
Okay.
When you also look at the maize sector, you'd also realize that we have garnered some encouraging numbers there. You're looking at numbers around 2.3 million metric tons in terms of deliveries. Cotton is also doing well for the 2024-2025 agricultural season, and we're projecting numbers around 28,000 tons. Moving away from agriculture, when you look at mining, it is also a critical sector that has been doing very, very well, especially developments that are happening within the gold sector. You are talking about the gold prices. You'd realize that gold prices at some point in Q3, they have reached as high as 3,800 per ounce. And that has been doing a great deal, especially to our export numbers, to our GDP growth, and also our foreign exchange earnings.
Okay. Now, like you were saying, agriculture has been providing a lot, and the IMF identifies improved agricultural yields and record high gold prices, like you mentioned, but also robust diaspora remittances as key growth drivers. Now, from a structural economics perspective, how sustainable are these external and sectoral factors in supporting long-term economic resilience?
So to some extent, relying on gold receipts and relying on diaspora remittances do assist the economy, but you then have to take into consideration that the gold sector, the diaspora remittance, it's also affected some downside risks. You're looking at price volatility. Yes, we're talking of high prices now, but what is going to happen when we get to 31 December 2025? Will the gold price continue to trade around 3.8, around 3.7, probably to be around 3.5? So the volatility in price, the quantity of mineral that we are chasing, as of now, I don't think we have got an exact figure of how much gold is left in this country. So when you look at sustainability in the long term, obviously we have to factor these aspects. But what is it that the government can do now to ensure that there is actually critical sustainability in as far as the export sector is concerned, and also the diaspora remittance aspect is concerned? You're looking at promoting other key export sectors. You're looking at your horticulture, you're looking at the manufacturing sector, you're looking at the energy sector. So these are some of the sectors that we can actually look at from a government perspective to say, okay, we have garnered so much in gold, but what else can we do to ensure that there's sustainability in the future?
Now, despite this positive outlook from the IMF still warns of medium-term challenges, including limited investor confidence, a high domestic debt burden, and potential crowding of the private credit. Now, what fiscal and monetary strategies could Zimbabwe adopt to mitigate these risks while maintaining growth momentum?
So when you look at that aspect, it's critical to acknowledge the gains that have been achieved so far, especially since the introduction of ZIG around 5 April 2024 to date. So what has happened is that we have seen relative stability in terms of inflationary pressures and also exchange rate volatility. So what is key going forward is to ensure that there is that policy consistency, especially ahead of de-dollarization. That policy consistency is going to usher in the much needed public confidence that we need in this country to ensure that we continue on a growth path that is desirable, and also a growth path that ensures that every citizen within this country is benefiting from it.
All right. Now, the government itself, their own growth forecast and projections, which are slightly above the IMF's projections. Now, how does this variance reflect differences in macroeconomic assumptions and policy confidence within Zimbabwe's economic planning framework?
So when you look at the numbers, according to IMF, you're looking at a GDP growth of 6%. When you look at the numbers from the Ministry of Finance or the local authorities, you're looking at GDP growth rate of 6%. So from a numbers perspective, we cannot really say that there is a big variance there, because the variance is only 0.6%. But what is key and fundamental to highlight is that the variables, the input factors that are contributing to this 6% by IMF or the 6.6% by the Ministry of Finance, you're looking at your key sectors like your agriculture, your mining, your manufacturing. So in terms of the input variables that are contributing to this GDP growth, there is convergence there. So we cannot really say that we are not aligned in terms of the variables that we are looking at, but there is convergence, but it's only an issue of a number, which is the 0.6%, that we can then say that's the deviation that is there.
Okay. Now, just I'm out of curiosity, how then do these numbers get to be projected? Like we were saying, the 6% from the IMF and the 6.6%, how then are these numbers created? Because there's a bit of a difference. Are we saying that IMF projections are always less as compared to government projections, or government projections are always more as compared to IMF projections?
Okay, so when you look at how these numbers are then derived, these numbers are derived from the sectors that then contribute into the overall figure. Okay. What are these sectors? Your agriculture, your mining, your retail sector, your insurance sector, your energy sector, your tourism sector. So what these authorities, whether you're looking at IMF, whether you're looking at Ministry of Finance, what they do is that they look at what is the growth that we are projecting for the transport sector, what is the growth that we are projecting for the retail sector, what is the growth that we are projecting for the insurance sector, then come up with an average growth that then contribute into this number.
Let me hold you there, sir. We're also leaving out one important sector that is being overlooked, the informal sector. Is this also included when the IMF is coming up with its figures, or when the government is also coming up with its figures? Because the informal sector is quite a huge sector here in Zimbabwe, and it needs to be also addressed.
I would like to believe that the informal sector is being included. However, the only challenge that is there is on how these numbers are then being derived. For example, there is no actually an exact figure of how much production is happening at Mbaresiaso, how much production is happening at Glenville. But when you then look at these authorities, they know that there is informal sector in Zimbabwe, and informal sector is a very dominant sector and a critical sector, and they have to include a number. I would like to believe that there are some matrices and KPIs that are used to actually derive some estimations of the production that is happening within the informal sector.
Now, that's quite an interesting discussion we're having in the studio on this show. Do join us in the next segment. We've got more to unpack here on World of Business, only on ZBC. Now, welcome back to the third segment of World of Business, and our topic for today is on the IMF projections of Zimbabwe's economy in 2025, which is seen being grown by 6% as compared to last year's 1.7%. Now, I'm still joined in the studio by Mr. Rukawa, our economic analyst, who's helping us unpack and dissect what's happening on this episode. Now, Mr. Rukawa, with the economy projected to grow by 6%, what are the expected transmission effects of this growth on the average Zimbabwean life and employment levels and consumer purchasing? How is it affecting the average Zimbabwean?
So when you look at the projected growth, Tafara, you'd realize that when you talk of the mining sector or when you talk of the agricultural sector, for example, the mining sector, what you then realize is that 60% of the deliveries that are coming from the mining sector, especially looking at gold, they're coming from the artisanal miners. So this is exactly a direct benefit that is coming to the Tom, Dick and Harry that is on the ground. So the benefit is actually there. When you then move to the agricultural sector, let's talk about the tobacco that we have talked about, the 354 million kilograms of tobacco that was delivered for 2024-2025 agricultural season. You'd also realize that it is the communal farmers, it is the farmers that you see in the rural areas that are doing this farming, and the income is actually going directly into their pockets and into their purses.
Now, in what way will such growth impact on the gold-backed ZiG currency, investor confidence and the broader foreign exchange market?
So when you look at the stability of the ZiG currency, it is mainly to do with the contractionary measures that RBZ and also the Ministry of Finance have been undertaking from 2024 up to date. So the stability, obviously, it's basically a monetary issue as long as the government, RBZ, is ensuring that there is limited growth in money supply, especially in terms of the local currency. We should have the stability that we desire as an economy. When you look at the numbers in terms of ZiG money supply, you're looking at 16 billion as at June thereabout. And if we're going to contain a growth which is healthy and a growth which is sustainable, looking at 5% and below, that should be good and also ideal for the stability that we may need on the ZiG side.
Now, looking at debt restructuring negotiations which are ongoing and are critical for Zimbabwe's sovereign credit rating, how could a successful outcome improve capital inflow, foreign direct investment and financial market confidence?
So when you're looking at the negotiations that are happening between IMF and Zimbabwe or World Bank and Zimbabwe, so what you will note is that IMF and the World Bank, they tend to be the mouthpieces for everyone else. So as long as they clear us in terms of the debt issues, you'd like to believe or you'd know that the rest of the world will also start to look at Zimbabwe, especially from an investment perspective, and also looking at considering investment options within the country.
Okay. Now looking ahead, which structural reforms and policy interventions are essential to ensure that this rebound translates into inclusive and sustainable growth in all sectors of the economy?
Yeah, that's a very critical aspect or critical area to look at. So when you look at the policy position, that is key, especially from now going forward. You look at policy consistency. It is something that we need as an economy. As long as we are consistent in terms of our policy, in terms of the direction that the government is taking, you would realize that that would promote investor confidence. Ease of doing business, I think we've been talking a lot about the ease of doing business. It's now time we want to bring finality and also to bring clarity in terms of what exactly are we doing to address the ease of doing business or to promote the ease of doing business. So these are some of the policy measures or some of the low-hanging policies that the government can actually look at. Another critical aspect, obviously, that has been making a lot of noise within this economy, issues around quasi-fiscal activities. I would like to believe these are some of the issues or areas that we can look at from an economic perspective in ensuring that we promote the investor confidence that we need as a country.
Now, thank you for your insights, Enoch. We appreciate you very, very much, and thank you for having taken time to join us on the show. Now, Zimbabwe's economic growth projections from the IMF and from the Ministry of Finance are a testament that Zimbabwe is indeed working towards growth and Vision 2030. Now, from myself, Tafaranda Guta, and the crew behind the scenes, we are happy to have had you here on the show on World of Business, only on ZBC. But till next time, back to business.